Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results.
So stressful. And the world's on fire. Good God. I can't look at this, guys. Like, my strategy is you buy it and you hope that you gotta get spotted. Yeah, but we all think you're crazy. You don't fight this. No way. The markets are freaking out and you don't think that anything is wrong? Come back tomorrow and I'll lose it all. Should be fun.
Good morning, everybody. It's Monday. Hey, well, this is going to be an interesting week because we got CPI numbers, and man, Friday was nuts. So, I'm still in disbelief about Friday. Seriously? Let's come to the charts, man. Look at that move on Friday. Woo! Now, there has been a little bit of a respite in the treasuries, and it looks to me, well, the ZB came up. I can see a little bit of flattening coming back through here in the market today. Okay. It'll be a little bit careful about the short end. Oh my gosh, is it showing you the wrong screen? It's showing you the wrong screen. Hold on. There you go. Look at this. It might be coming back. It looks like still flattening though. Keep an eye on that because some steepening could come in here with the longer end maybe, pushing. August 8th or August 5th. Oh, you know what? We need to change the date today. It is the 8th. There we go. Sorry about that, Colin. All right. Anyways, S&P 500 recovering from the damage that was done on Friday. So at first, the S&P just really got hammered, right? And throughout the day, they kind of recovered it, ascending triangle here in the overnight, a little bit higher. So market's looking mostly optimistic at the moment. I think that there's a lot of flows supporting us right now. I'm a little concerned that August could be a relatively positive month for equities, and then shit hits the fan in September, October, okay? That's the way that it tends to go. Gold and silver, well, gold got hammered off of the non-farms news too, but it is also recovering here this morning, and silver especially, man, silver got hammered, really destroyed that day, and they are up big today. Oh, that's very, very interesting. My morning news squawks and so forth did not note that. Bitcoin also above 24,000. The Bitcoin guys are getting a little hopeful here. If Bitcoin is still in a bear market, now's the time to smack them down, right? I don't know if that's going to happen though. Well, and then you got the dollar here, still strong. Still very, very strong, the dollar. So, zoom some things out here a little bit. Now, coming over to the liquidity conditions and what we got going here in the treasuries, I'm not too, you know what? I just don't use this 60. I'm just going to close it. I'm not too happy about what I'm seeing here this morning in terms of the amount of movement and volume that we're getting. I am seeing a little bit of flattening coming in across the board. So it looks like that the 5-year is dragging them more. We are at 2.8 in the treasuries, which is a good spot. But the action so far has been very, very slow. Well, there was a little bit of a break there at 22.5. So liquidity here in the micro 10-year is really good. which I find a little curious. Oh, looks like we're getting okay, so like the 10-year is going down, but the 30-year is going up. So we're getting like some extreme flattening here. Oh, I thought I turned that off. Oh well. Going to go fix that. Okay. Looks like the 5-year is winning out here. Not yet a significant break of 21.5. Let's come through here and check on Twitter, see if anything interesting happened. Steve Leishman, what if strong job growth, rather than being inflationary, is part of the solution to inflation? Well, I think that to some extent it could be, but I'm a little concerned about strong jobs growth right now being like so surprising to us, right? Okay, there's a break of 21.5. Looks like they might trade that through a little bit. Not hitting 21 yet. See, even the market ear is kind of noticing. Sleepy Bitcoin waking up, question mark, time for the Bitcoin catch up moment. Okay, there's break 21. Jimmy Oreo, if we define inflation to be any time prices rise greater than 10% year over year, we could solve the problem immediately. Bam. No inflation. What should I fix next? Yeah. Gosh. Oh, what's Elon Musk talking about here? Look at them go. FSD beta 1069 drops on 820. I have no clue what Elon Musk is talking about there. Must be one of their products. Tesla geeks must know what he's talking about. Much of the social history of the Western world over the past 3 decades has involved replacing what worked with what sounded good. Thomas Sowell. I love that man. I'm all for progress. Sometimes I'm concerned that what is being built as progress is regression. The one thing, Jim. Oh, this Jim. Sometimes Jimmy Oreo says things and I'm just like, what the hell, dude? But sometimes he just tweets the most hilarious things. The one thing it seems Republicans and Democrats have in common is that they both mistrust Republican politicians. It's hilarious. What's Nassim talking about? The Alex Jones problem. The fact that so many on the quote unquote right are lining up to the conspiracy cluster instead of actively fighting it is irreparably destroying the credibility of conservatism. Well, I agree with him on that point. I am concerned that the right has become I don't want to say anti-science, but anti-logic. I understand the argument that that science is often used to manipulate people, and that it's not really real science sometimes. But that attitude has led conservatives to, in many instances, rejecting outright logic and latching onto crazy things. And I feel like that if we don't have empiricism in our society anymore, then what do we have left? Because that was one of the main drivers that I think drove us to the modern, that allowed us to achieve the modern world, was empiricism. The solution isn't get rid of empiricism. The solution is find distortions in our institutions, particularly universities, and fix them, right? There was a pretty decent pullback here, and they come right back down to the bottom again quite quickly. Friends, considering an economical paperback version of the statistical consequences of fat tails, does the absence of color differentiation for graphs bother the reader? Well, so Sharp and Goose says, no news today. Are you looking for trades? While you are correct that there is no news, I still think that you're going to see some movement in the treasury market off of, the aftermath of what we had on Friday and concern about what we might get on Wednesday. So, but no serious economic news today. You're right. Also, we do have some things going on in the treasuries that you would normally kind of dismiss. At 11:30 Eastern time, we have a bunch of bill auctions, 6-month bills and 3-month bills. That's both bill and bid to cover. So that might have, and that's going to be more on the, that is on the shorter term interest rates. That's kind of in the market that's been moving more. The 30-year has not been moving as much. So there's still some reasons to keep an eye on it, and to have some movement. Yeah. Essentially, those things, the what we've got going on in the bond market, we've had a lot of volatility. We're likely to see some movement today, and both the risks and what we just had, I say both speak to possible downside, but those are some things that we could use as predictors of order flow that we might be able to trade off today. But I think you're thinking along the right lines in that it is Monday. Monday can be a harder day to trade, and sometimes we have to be a little bit more careful on Mondays, right? Like this has been a good trend to the downside, really has, but compared to the action that we've been getting in the past week, it's just teeny tiny, right? So pretty decent amount of order flow selling, though. Decent amount of order flow selling. Does appear we might have a liquidity hole at 20 already. Also, I should note, when we started out, the liquidity looked okay. It was like action was slow, but liquidity looked okay. We were putting up 12s. This area that we just crossed, that we came out of, okay, there's a spoof at 20. That one was not large enough to trigger my sounds, but a 2000 lot sitting at 119.20. Anyways, this area of liquidity looks a little lighter for some reason, so we'll keep an eye on that. Is that large order enough to shove them down to a new low? It's a little. He's not pulling away. I mean, that looks like a legit order, but yeah. Well, okay, so not some of it pulled. There's about, oh my gosh, what? They traded into it, and he stuck another 5K on it. Did they trade into that again? Well, now we need to dip into some of our experience with large orders, right? Because I don't like to see large orders, but this is very early on in the session. This is very early on in the session. So I don't think that that means like straight up, okay, that order is real and we're going to sell off. But I am going to give the large order more heed. There is a decent amount of volume has traded at 20 now. Okay. But I should also be on the lookout for like stir the pot, right? Sometimes they do that sort of thing to stir up activity. But I don't know why, if you were going to spoof, why would you do it at 20? There was already a liquidity hole there. You were likely to be able to execute a lot in that location. So I don't think that you would need to spoof to shove it down necessarily. But then like they did take fills. That's the other thing, is that they have taken at least 3,000 fills or so at 20. So yeah, I also know. Okay, so 2,500. So they did trade back up through it. The spoof did not. Well, let's just see what happens. You know, my tendency is going to be to overthink these things, right? Trades back down. And it's kind of given us that liquidity hole behavior at 20 already. Yeah. Well, 320 is a little better. Spread is widening here in the micros too. 20.5 goes weak. 5 years still looks like it wants to drag him down. Hmm. But now they go down to the lows with the 5-year, not quite breaking new lows, but very much the leader. Like the 30 and the 10 are in line with each other, but the 5 is a double. Mustafa Sifa, how are you today? Okay, so just want to note that on that last leg, my spread chart for the ZNZT. Now this chart has been a little bit off compared to some of the others, but it looks like that the 2-year had a change there. It was a little bit more dramatic than the 5-year. Which resulted in some steepening in the 210 curve. So there was an impulse to the downside, but it looks like there's still a little bit of gravity there at 20. Spot gamma. So something I forgot to mention. I should have mentioned it right at the beginning. But Bed Bath and Beyond was up 20% overnight. 20% overnight. So yeah, Spot Gamma tweets out, so we're doing this again. Yeah, it looks like it's going to be another zoo in Bed Bath and Beyond today. Okay, that push to the downside was looking okay, but it's still just kind of meandering around here, and there still appears to be some degree of liquidity hole at 20. I'm kind of wondering these spoofs that we've been seeing. I don't think that that's like an institution that really understands these things. I think that that's a large trader that has too much money, and because why would you spoof at that spot? If you're trying to drum up liquidity, you wouldn't do it at 20 because you're already going to get it, right? I might be wrong, but I think that guy doesn't know what he's doing. I was seeing a bunch when they ticked up that time. I was seeing a bunch of orders change, but then it ticks back down. Can't be. It can't be. Well, it could be though. Well, 1,000 lots. Oh no, they'll totally like you give somebody a few $1 million in their account to do the spoofs. Like you want to like separate yourselves, so you have somebody new start an account. They take a couple of trades on it so that the account is like, considered a legit account first, and then you give them wire them a few $1 million. They put the spoof on, and then somebody else is absorbing on the other side or whatever the deal is. But that's why I'm saying, like, why would you do it there? Doesn't make sense. Because if you put a large offer at 20, then the reason you do that is because such an extreme imbalance will have the tendency to create sell orders. But like you're already going to get a lot of opportunities to get fills at between 19.5 and 20.5. So why spoof? Right? There's no point to it. But they must not know that that's the liquidity conditions right now. So if anything, if that was like initiating a trade and it's so early in the session, they might have just done something and gotten stuck. You know, like they might be stuck with a bunch of longs here. And it's not going anywhere. And they're like, oh, wait, why did I do that? That was a bad idea. Because if that was a spoof, right? If that was a spoof, then what happened was they were spoofing with a large offer so that they could take buys. That means that they're long here. And it was going down to the bottom of this and pressuring them. Didn't break because the liquidity hole is still at 20, but you get what I mean? Well, I'm drumming up a scenario that, you know, I don't really have a whole lot of proof that that's what's actually happening. But, you know, that's just one of the scenarios that I can try out from what we saw happen there. Unusual to see a large order like that so early, though. Well, I should also know, I'm just realizing that cumulative delta in the 10-year has come back up to here. So there probably was buying through this area. Now that was weird. Does it go? Okay, so I'm seeing a steepener here. 30-year down 2 ticks. The 10-year seeing some selling at 20.5, but perhaps an iceberg there at 20.5. Well, 1268. I find that interesting because I've been keeping my eye out for a steepener. Been keeping my eye out for a move where the longer end of the curve, the rates on the longer end of the curve come up, because it's a little bit silly, especially here in the 10-year. It's a little bit silly to see the 2-year at 3.25 and the 10-year not able to get above 2.8. Not even able to get to 3% is a little bit like, that's not what I expected. But the 10-year is not playing along. Like the 30-year is going here and the 10-year is not playing along. See that? Oh, you know what? Totally forgot. We could put music on. I didn't even think of that. I don't even have, where is it? Spotify. Do I not have Spotify pinned to the start menu? And then to the start menu. Spotify, if you need a spy. Oh, Spotify.
Say Julia, he's so excited.
No, that is not what I wanted. There we go. See, now the 5 is down. The 30 is down 3. The 5 is down 1. Okay, the 10-year wants to hold 20.5. Okay, so now that time, the 30 is still down there. Yeah, the 30 is still down there. I don't know if I should read too much into the 30 being in this 29-30 area, but it is what it is. The 5 and the 10 ticked back up there to the high end of the range. Not seeing a ton of orders coming through here, though, are we? S&P 500 doing something here. Today could be a day for E-mini. I mean, we're over here watching the treasuries, but with Bed Bath and Beyond going, there's likely to be a bunch of short squeezing all over the place, and there's going to be plenty of shorts out there to squeeze. Yeah. I'm having a little bit of a hard time here because every tick that I see in the treasury, I'm kind of getting that like, woo, like it's affecting the book and that it might be a significant tick, but I know that it's probably not in these current conditions. So I just feel a little like trigger happy. The S&P 500 turning up like that. I'm not seeing any news or anything, but the S&P 500 turning up like that, that could create a little bit of pressure on our side. See the 30-year all the way down there at the bottom now. 5 and 10 still in line with each other. Think that 26 will break. It's not like anybody's hitting it or anything. 26 in the 30-year. That looks like it's going to tick up, yeah. So that time, 5-year down 3 ticks, 10-year down 2. Uptick. Hum. It still looks like a pretty massive liquidity hole at 20 though. – Okay, that tick was maybe a little different. Seems like the 10-year is following the 30 more than it is the 7 at the moment. Because look, the 7 came right back up to unchanged, but this one hasn't really moved. Really? I saw a couple of fellow one lots putting stuff out there at 08 and 09, so I said, okay. So I really didn't like the way that turned. You know, now is not necessarily the best time for a position. Like when I took the original trade, it was good, and I did get some good initial excursion. I think I only lost like 5 ticks off of my maximum. Well, let's see here. MFE was 11. MFE was 11. So, actually, I only got 3 off of that. That's okay. Val, how are you? Wait, that's a new name. Who are you? Good morning, Seth. Oh, wait, are you the guy from the Facebook group? I bet you are. That's funny. How are you doing? I did not like the way that turned, man. Oh, no, you don't have a Facebook? Oh, there was somebody on Facebook was asking me a question because they were asking questions about Jigsaw. It was really interesting to me. I really want to know what is going on with this guy's machine, because he says, well, some backstory here. Ninja Trader has this thing where your license is like attached to your machine ID. Like there's like this hash that Windows does to like uniquely identify the machine, so that if you try and move your license to a different Windows machine, it knows and it will stop you from doing so. You can only have it on like the one machine. And if you want to move it to a different machine, you have to deactivate that machine first and then move it to a different machine. And this is how you prevent the software piracy, where like one person shares their key to everybody or something like that, right? Well, this guy says that his computer shows up as different, forcing him to like change the license over every time he runs Windows Update. That's weird, right? You're not a regular, don't have too much time during the week, but I pop in here when I can. Oh, well, I appreciate it, Val. Wow, that actually makes me feel so special that even though you got a bunch of stuff going on and everything, you're still thinking about me and want to stop in. That's so cool, man. Dude, I think I did the right thing there by bailing. Hey, my voice. I did not like the way that turned. Like the 30-year was pushing and trying to drag them lower. It was like somebody was trying to put the flattener on. It was not going, and there was a few ticks I really didn't like. I really didn't like what I was seeing in the micros too. Isn't that weird? I like what's going on in the micros probably shouldn't matter, right? Probably shouldn't matter, but I could just see it, like the one lots were showing up there and everything, like that got people's attention for whatever reason. So we bailed. Yeah, it was a good. I would be break even right now, or I'd be losing 2 ticks if I had waited till now. Sharp and Goose could be a graphics driver update changing something in the registry, which changes the hardware. Yeah, exactly. Like it has, but he sounds like he's saying it's Windows Update. But I was wondering, like, well, one, you could just have something really weird with your hardware configuration, but it could also be, whoa, what the hell? Dude, I did not even, okay. So Kevin says, wow, huge volume in ES last 5 minutes. Any idea why? And I'm like, well, we did have a little move up, but now I'm looking at it and they like turned back around really hard. And that was probably why the treasuries started to see a little bit of a bid. Well, the one thing I am seeing is NVIDIA preliminary second quarter revenue, 6.07 billion estimate. 6.07 versus an estimate of 8.1. Cites the shortfall as being primarily driven by weaker gaming revenue. So the move that we might be seeing there might be just from NVIDIA. That's a little curious, don't you think? Windows packages, updates, graphics, and networking stuff, unless specified otherwise in the settings. But even if you updated like your graphics card drivers, I wouldn't think that would change your ID. Like the only thing I've ever heard of making that kind of a change is like you switch your motherboard or your CPU. I don't know, but I'm also wondering like, okay, like what if you're not using a real version of Windows? Could that cause that sort of a thing? I don't know. I've never heard of an instance like this before. It is interesting, isn't it, Sharp? Yeah, no, Kevin, I think it legit was. If it was something like Apple/Amazon, sure, but NVIDIA causing an almost 20-point drop in 7 minutes. Okay, so here's why I think it's a reasonable explanation for what just happened, is that there has been a significant amount of speculation in the chips in particular because of this chips bill that was coming through the Senate, right? Remember the whole thing with Nancy Pelosi's husband bought a bunch of NVIDIA shares and all that sort of a thing? So there was a bunch of people involved in that. And I think that a really big miss would lead to a lot of volume. So I think it could be, although I do have to agree with you that 20 points seems a little excessive, doesn't it? But that's the only piece of news that I'm seeing. Everything else seems to fit. So I think I have to go with NVIDIA being the leading theory as to why the S&P 500 moved like that. And it does look to me like somebody was setting up a steepener trade by selling the 30-year end of the curve, and it did not work out for them and they bailed. Because you saw pretty good buy volume in the 30 on that side. I think that trade screwed someone up. Or maybe someone big wanted to sell ahead of Wednesday's CPI. I don't think that one makes sense, because if you were a large institution that wanted to sell stocks before CPI, or you were trying to hedge yourself ahead of CPI in the S&P 500, you would wait until the S&P 500 is open when you have more liquidity to be able to execute that and not completely destroy the market, right? So I don't think that one necessarily makes sense. Like a big move before the S&P 500 has opened up is very likely to be news of some sort. I mean, it's totally possible for the futures to move 20 points on their own, but not in 1 minute, right? Not in 1 minute before they're open. I'm guessing that that NVIDIA taking a hit probably pulled the entire tech sector down. In fact, I am seeing that ES is outperforming NQ considerably here. How do I have this set up? ES and Q. Two ES versus one NQ. So that going up means that ES is doing better. Yeah. So NQ getting hammered, I think. Maybe I should switch that around so that when NQ is going down, my indicator goes down. That would make a lot more sense to me. I mean, we broke last week's high and just went back in Friday's range. So bad on where someone bought. This is not a huge drop. Yeah, you're right. It is kind of just like coming back to where we were. Some say the structure is weak. Well, I think that this sets up kind of some more interesting things over here. I think that we should look at some stuff. Let's pull up a chart on TradingView here. I don't want to open up Fidelity because that sometimes slows things down. So we'll open up TradingView to watch it. I feel a little self-conscious when I open up TradingView because when I see people like post on Facebook and stuff and they're using TradingView, I'm kind of like, yeah, okay, they're not. I feel, especially if you're trading futures with TradingView, I'm kind of like, plebeian. You're a plebeian. Okay. We'll change these to 1 minutes. Look at Bed Bath and Beyond. Val says I feel the same way about. Well, I'm trying to pick my words carefully because I know that it's a popular app and there's going to be a lot of people using it. But I feel like that you trade futures with TradingView, it means that you're poor. No, not that it means that you're poor, but most futures traders that use more advanced platforms that are futures specific. This is the same with Thinkorswim. Man, don't use Thinkorswim for futures, guys. No. What's wrong with TradingView? It's cheap. Yeah. Here's the thing. Okay. Here's the bigger thing that I'm fighting against. All right. Retail traders pay too much attention to charts. Think of it. I was thinking about it. Maybe a different way to present this to you guys. So tell me what you guys think about this. Okay. You want to know where it's going to go. We can say the current conditions plus the future orders equals the change in price, which you can see. Okay. So you have to know both of them. You have to know what the current conditions are, and you have to have some predictor of order flow that's going to predict future orders, right? But what retail traders do is they say, I can use C. And I can determine just from C some sort of change in price. And it doesn't work like that. But not only that, but C can be broken out. C has to do with, the limit orders that are being placed. Actually, we don't call it that. We call it, I think it's Y. I don't remember the symbols we use. I can't remember that. Anyways, there's the limit orders that are being placed. There's the limit orders that are being canceled, and there's the market orders that are being placed. And that's what really kind of defines your current conditions. And even those three variables can't give you all of the information because you kind of have to watch it over time. Like I said, you want to see what the latent liquidity is doing, right? You want to see what the latent liquidity is doing, and so you can't see that just from looking at it right here. You kind of have to see it like trade over a price multiple times, right? Now you know what the current conditions are, right? So you can't even see what the current conditions are just from looking at a price chart. The price chart doesn't tell you the full story, right? But what I see every day, especially on Reddit, Reddit is the place where I see it the most. So I guess my brain kind of focuses in on that. But what I see on Reddit is these guys that are just obsessed with charts. They're like, they post a chart and they're like, oh, what does this mean? They don't want to say anything about the chart. They don't want to bias anybody, right? They just want people to go, okay, let's look at the chart and see what's going on. You know what? There's a lot of people, when there's a thread like that and somebody says, oh, I'm having such a hard time. Like, what's the solution? There's so many people come in and say, price action. You just need to use price action. Yeah, Sharp and Goose knew where I was going. The price action crowd. Here's what I think goes on with that one. Is the price action crowd, by simplifying everything, basically gives themselves more discretion and therefore a greater ability for their own subconscious biases about the thing that they're trading to come through, and that gives them, helps them do better than the people that are just relying on lagging indicators, right? But every piece of data that I've seen says that the price action crowd in general doesn't make money either, right? And whenever I see this, here's what's going through my mind. There's all these retail traders. There's these guys that they look like they're trying hard. They have an interest in it, and they're wasting all of their time with charts. They're wasting all of their time with charts, and they could be learning about the actual thing that they're trading. They could be learning about the interest rate market and what the Federal Reserve does. They could be learning about how the indexes are constructed. They could be learning about the economics behind different sectors of the S&P 500 right now, right? They could be learning about the thing they're actually trading. And instead, they're wasting all of their time looking for patterns in charts that don't really exist. And I just think it's really sad. What do you think of pivots? So pivots are kind of a really interesting example because floor traders did use it, right? And I think there is some evidence that back when it was primarily floor trading, that they did look at pivots. But I don't see any evidence that pivots were effective at predicting where things are going to go. And what I find over and over again, whenever I try and backtest a specific level like that, is what I find is like the more significant that level tends to be, the more random the action around that tends to be. So like a pivot, but what pivot? Well, so you typically, when we're talking about pivots, we're talking about pivots based on the open, high, low, close that they calculate. I forget what the calculation is. I have an indicator on here that shows it to you. Because something I used to do, because I saw a lot of people trading it on Twitter. They were talking about pivots constantly. It was all of the what should we call these? The psychology crowd, right? There's a bunch of gurus that are all into psychology, right? And they were all posting stuff, their rooms and trades and stuff like that. And I'm like, well, I don't think that actually works. So what I'm going to do is I'm going to follow it and I'm going to trade against it. I'm going to find a situation where I think there's a really high probability that they're going to go through it, right? So I waited for a situation where the sentiment and so forth was likely to create a trend day, and they were all fading it at that pivot. And it just blew right through it. And I caught a really good winner off of it. And then all of a sudden I didn't see so much on Twitter about pivots. Right? Oh, that was before the pandemic. Okay. That was a long time ago now. So the point being, if there are certain technical analysis indicators that have sway because so many people are looking at them, I think that the correct way to trade it is to wait for when one of your predictors of order flow contradicts their technical analysis predictions and trade against them more hard in that situation. Size up a little bit. Yeah. So many different versions out there. Let me look up here. What was it? Pivot boss. Oh boy. Okay, so R1 equals pivot equals high plus low plus the close divided by 3 is what it is. And then all of the other ones are based off of that. So like R1 is 2 times the pivot minus the low, R2 is the pivot plus the high minus the low, R3 is R1 plus the high minus the low. So watch RSI do the opposite and use order flow for confirmation. Oh, well, I don't. So if you do RSI on an intraday chart, you're really just picking up noise. I don't know if that one. I think what I'm talking about kind of works a little bit better when there's like a large number of people watching this level all day. So like pivots is a great example because basically you calculate the pivot right on the open, right? When we open up, you can calculate the pivot on the previous day's action. And so there's all these numbers that people are looking at to see things happen. So if they're all looking to see it bounce at R1, right? And you know that it's not, trade through it, right? But whereas RSI on a short-term chart, I really feel is mostly noise. On a long-term chart, that seems like there actually is something to RSI. When I say there is something to it, I'm not saying that you would be profitable from trading it per se, but there is a statistical aberration with it. It's just that the problem is that when RSI fails, it fails hard. It fails hard. So if you were to do like a 14-day RSI strategy where, you know, you bought it when it got to below 70 or 80 and you sold it when it got above 30 to 20 or whatever. I think it's the opposite of that, but whatever. You probably will make money on that strategy, or rather, I haven't tested it in a while, but I bet you it's still profitable. But the Sharpe ratio on it is just terrible. The Sharpe ratio on it is just terrible because the way that it's making money is it's taking on more risk, right? It's basically it's buy and hold the S&P 500, but with more risk because you're always buying when things look bad, selling when things look too good, right? But it also, I think that also only works if you're only buying. So that kind of says, well, the only reason that it works actually is because the S&P 500 over time tends to go up, right? What about using fibs as a timing tool? You know, so something I find interesting, I really want to interview this guy, just because he's had such a, what was the word that I'm looking for? I mean, he has a really strong reputation in the futures trading community and especially the futures IO guys, is Fat Tails. And they have he works together with 2 or 3 other guys, and they have a set of indicators called lizard indicators. And oh my gosh, guys, it's for like $150 you get like 30, you know, like 30, 40 indicators or something like that. And they're all indicators that are far more advanced than your typical technical analysis indicators, right? And one of the things that he has is he has a bunch of indicators that are showing you floor pivots, Fibonacci levels, etc. And these are all like daily ones, like daily Fibonacci retracements based on previous day, for instance, right? And they have a blog, and every time that they talk about a strategy based on that sort of a thing, they're always talking about using those levels as exits. Isn't that interesting? That seems to be much more in line with what I'm telling you, right? That when an area has a lot of people looking at it for a trade, that what tends to happen is it just becomes a liquidity hole and it chops around that area, right? In other words, you're introducing more noise in that location. Now, a price action person might be able to get something out of that because the price action person is typically they're looking for a small win with a large stop, right? And if it just ranges in those locations, then you might be able to pull something. It's just that when it stops working, it stops working. Again, I always thought fibs were crazy even when I was new to stocks. Well, I mean, I think it's attractive, right? Here's the thing. Okay, like, have you ever watched the YouTube channel Number File? Oh man, that channel is so cool sometimes. A lot of them are just kind of like, meh. But a lot of the time, they will show you these really strange and interesting things that, especially when it has to do with Euler's number, right? E. Oh man, that number is so cool, right? Or what's the other one? The golden ratio. Or wait, are those are the same thing? I think E and the golden ratio are the same thing. Those are 1.6 something, right? Oh man, I've seen some of these where like they show this is why this number leads to the pattern in a sunflower, for instance. It's like, oh, that's so cool. Or another one that I really liked was the pattern that prime numbers make if you kind of chart them on like a spiral going out. It's like, whoa, that's why that is such an interesting pattern, because it's like there is some consistency to it, but then there's also, it's still completely random. Inside, it still doesn't help you predict what the next prime number is going to be. Oh, it's so interesting to me, right? I think that most people that watch my channel here would probably enjoy that channel, but I also think that most of you would agree that your average person won't like that channel. Your average person doesn't like math, and it's just us, right? Well, I think the reality is that humans like to keep things simple, but humans are built to look for patterns in math. Our brains evolved to predict patterns in where animals would go to hunt them, and to look for patterns in like the weather so that you could plant crops and stuff, right? The problem is that the things that we're encountering in our world today are much more sophisticated patterns than what our brains are capable of seeing. Is the real problem, right? So we want to come into stocks and see these patterns. We want to see these patterns. There's a reason why almost every retail trader out there, when they start out, they say, I'm going to look at charts. I'm going to be a technical analysis trader, and I'm going to figure this pattern out in the market. I'm going to make money consistently every day. There's a reason. It's not just that it's attractive to them, like, you could come in and make money every day from just doing this one thing. No, it's also attractive because that's the way that your brain wants to think, right? So it doesn't surprise me at all that Fibonacci numbers become a thing in particular. Tactile. It's tactile. Yeah. Well, and the other thing, Sharp and Goose, is that there is a pattern, right? But the pattern is this. Where's my pen? The pattern is this. You will, the more orders that you have, here are orders, and here's Q, and here's I. The more orders that you have at first, it appears linear. The larger, no more orders that are pushing into the market, the more impact they have. But then as it gets larger, it actually starts to trail off until you basically come to this upper bound, where adding more orders doesn't really give you much more impact. Once that meta order stops, there will be a post meta order impact like this. They'll come back like this. And then if you were going to do it again, you'd see a similar sort of thing like that. Okay. So what you're going to see is this. Okay. We're trading. There's a big move. Right. And then it's going to come back a certain amount. Right. The amount that it comes back is going to be dependent on how many orders came in through here and how long it took and what the liquidity conditions are. And then it's going to come back. Sometimes it can be as much as 50%. Okay. But I do it more on timing. I do it more like this tends to be like 10 to 15 minutes. So this tends to be 45 minutes. It's 1.5 times the other one, right? So if this is 15 times 2.5 is 45, right? So I just wait 45 minutes. But they see the Fib people, they see the Fibonacci pattern in it, right? And the problem is just that because they don't really understand why it's happening, that the Fib pattern doesn't really help them, right? And even if you understand this pattern completely, right? So now it's like, Seth, so you're saying there is a pattern, so I can like consistently make profit off of this, right? No, because you still need to know what the future orders are going to be. You have to have predictors of future order flow. And I have never found price on its own to be a reliable indicator of future order flow. Would you focus on swing or intraday? Any thought as pros cons for either one? It's a good question, Val. It's a very good question. So the higher that your time frame is, the more likely that you are to pull out a profit. Okay. So if you are day trading, intraday trading, the most likely thing to happen to you is that you won't have any edge. You will bleed money out of the noise, and eventually you will blow the account. You might be really good and you might be able to keep it going for a really long time, like I do, but the chances are you'll blow your account eventually, right? If you are swing trading, assuming that you're not doing something absolutely retarded, you might actually be able to pull a profit out of it. The profit that you get will have a very poor Sharpe ratio and will do poorly compared to, you know, the index or comparative assets, right? But you're more likely to actually make money from that. Yeah. So there is a real advantage to swing trading from that, right? Another advantage I think for swing trading is that I think a lot of swing traders think about the thing they're actually trading more often, right? Like a swing trader will come in and they'll say, oh, well, I think that there is a structural imbalance in the oil market, and so I want to go long. And then they go long, and the Russia thing happens, and they make a huge pool of money, right? And then that one time where it goes their way, they make a bundle, and so it seems like that they're a successful trader. But really what happened was they used fundamentals, right? They'll say they use fundamentals and charts, but you get what I'm saying? So that's kind of the advantage to swing trading. But from a larger perspective, the question isn't should you swing trade or intraday trade or whatever the deal is. The question is, what edges do you actually have, right? So for me, the things that I know that can potentially predict order flow, they aren't necessarily super strong predictors past 30 minutes. Maybe if every once in a while you get one that's really, really strong that might go for a day, maybe multiple days. But you can see here today, I was expecting to see further downside. It didn't really come through, did it? Hey, welcome back, Noel. How's it going? Didn't really come through. So that did not end up being a very effective predictor of order flow today. Although the trade was not awesome. I mean, it wasn't bad. The trade wasn't bad, but it ended up that wasn't really predictive of the order flow, was it? Right? So that's what you should base your trading off of is, what is the thing that I know? How long is it likely to drive orders, right? Could you use the technical indicators and then order flow for confirmation, or just better not to look at charts at all? Okay, so I wouldn't say don't look at charts at all, okay? Because again, you want to know what are the current conditions, what's the future order flow, right? So the chart alone can't tell you what the current conditions are, but it's useful. So what I do at least is I'm watching the DOM, I'm watching the liquidity conditions here. I want to see every time it ticks up and it ticks down, how many orders it takes, where liquidity holes might be. Okay, so like there's a little, there is a little bit of latent liquidity there at 22.5, willing to take bills at 22.5. Now we'll see what there is at 23, but I'm going to bet that if they tick up at 23, probably going to be another 500 contracts, right? That's the sort of thing that I'm watching, right? And then, but I will forget. I'll be like, what happened? So then I can come back to this chart and I can go, okay, well, we started up here, we came down, it failed, and then since then we've had a really messy uptrend to the upside, but it didn't break out the upside. It still looks a little bit uncertain, right? So I can use the chart to remember what's going on, right? It's just, if you're going to have a chart up, you need to say to yourself, technical analysis doesn't work, okay? Trying to use past price and volume alone to predict future price and volume Doesn't work. You need to have the current conditions, but you need something that will predict the future orders. So focus your attention, all of your study on what are some things that will predict future orders, right? Something that we know that's going to be dominating the markets right now, and I think that this kind of ends up being something difficult for us to trade, but I think that the dominant factors that you're going to see today is that we had a really strong jobs number on Friday, but we have a CPI number on Wednesday, and people are really scared of the CPI number, right? That's where we're at. That one kind of becomes hard to trade, but it is something that's going to predict the order flow to some extent. Those are going to be the most powerful forces in the market right now. Nancy Pelosi is the only one, right? Look for predictors of order flow, and that typically means that you need to know something about the market. You need to know something about the asset that you're trading, or you need to know something about the strategies of the largest players in that space to be able to predict what they're going to do. You need future predictor of order flow, because the price alone, it doesn't tell you anything, right? So because your tendency is going to be to apply technical analysis. Your tendency is going to be, oh yeah, we're getting a really strong uptrend here. I should jump on, and the trend is going to continue. And then it doesn't continue, and you're like, what the heck? Why did I do that? Right? We do that all the time. You gotta, if it's moving, you gotta, and you want to jump on board, like that can be a great trade, but you probably want to have some idea of why it's moving, and that reason it's moving is likely to continue moving it, right? NVIDIA, so like this strong downturn that we had this morning, I feel pretty certain that it was NVIDIA. Do we think that NVIDIA is likely to continue moving order flow in the index itself? I don't know if that's going to really give me a good prediction that, you know, I should sell the S&P 500 here, right? So besides news, could options? Yes, 100% sharpen goose. There is very strong evidence to suggest that hedging options positions can be a significant flow. And especially in the S&P 500, we haven't been so focused on this in the last cycle. In the last cycle, things really cooled off. And I think a lot of that is just because it's the summer. But especially come September, yeah, I can bet you that we're going to see some periods where the options positioning and how long or short the market is gamma could be a significant flow that you could get profitable trades from. Okay, what about the COT, commitment of traders reports? So the problem with the commitment of trader report is that it's a week late. So by the time you get the commitment of trader report, you should already know what it's going to say, generally speaking. There was somebody did a study where they took a machine learning algorithm and they applied it to, I think it was like the Chinese silver market or something like that. But the exchange that they were trading on gave COT reports every minute or 5 minutes or something like that. And so they were using that in their machine learning program to see, like, okay, if we moved up, did the number of positions increase or decrease, to see if like those were like new positions or people stopping out, right? And then they built a score based off of that. And that was one of the features of their machine learning language. And there was some evidence to suggest that it was effective. The Sharpe ratio of it was pretty good. So COT probably, I think probably could be really useful if it was timely. But unfortunately, we don't get any of that information until like it's a week later. I think though that COT reports are still good to look at occasionally, especially when you're beginning, to kind of get an idea of like what the market does, right? What you want to do is you want to look at like, okay, here's the COT report, and then you can look at other things like on Zero Hedge, and they'll talk about like, here's what the CTA strategies are doing right now, and there's all these different quant strategies that these are the flows that they've been seeing from them and stuff like that, right? So those are all like I think gamma is a really strong technical flow. Another really strong technical flow is end of month rebalancing. Yeah. End of month rebalancing. There can be some situations where market reverses, and because of the technicals, it reverses harder, right? So, but that's what we should be calling technicals, right? Because technical would mean it's not driven by the fundamentals. It's driven by the positioning and structure of the market itself, right? But unfortunately, technical analysis turned into there's patterns in price and they can predict where it's going, which is voodoo. It doesn't work. There's no scientific backing to any of that. So yeah, use charts. Yes, have a chart. Use charts. NinjaTrader is a great charting platform, but just keep in mind, just keep telling yourself, technical analysis doesn't work, right? I need to understand the current conditions, but I need predictors of order flow. What bothers me is that the retail traders are spending all their time studying charts and they're not learning about the actual market. Because here's the thing, markets are not efficient, right? I mean, traders understand that intuitively, but like it's basically been proven empirically in studies that the market is not efficient. The market tries to be efficient, but the reality is that where it moves is entirely dependent on the number of orders, and the number of orders never matches exactly where it should go based on the fundamentals. It's always too much or too little. And you can get these, meanwhile, you get these other technical flows like the end of month rebalancing that are just huge and move the market completely away from where fundamentals suggest that they're supposed to be. So the idea that the current price is indicative of all currently available public information is absolute nonsense. And it's I would say at this point, scientifically proven, right? So if we want the market to be efficient, right, that we want the market to factor in all available information, right, because that would be good for society if that was the case, right? How do we accomplish that? We have to actually know what we're trading, right? We have to actually understand those forces, and we need to understand why it doesn't always come in line with those, so that, you know, we don't get caught by those flows, and then, you know, we know when to, you know, like if we're seeing right now in the S&P 5, here could be a good example, okay? I don't know what's going on with the economy. I think anybody that claims that they do is crazy, okay? But, oh wait, what the heck? Why was somebody able to post a link like that in chat? That's really weird. That should have banned them. But let's just assume for the sake of argument that we know that the economy is not looking very good. Right now, we're seeing a lot of flows driving equity markets up because, well, they were really short for one thing, but there's also like stock buybacks and things like that. So right now, we're kind of in a situation where some things favor, you know, the stopping out the shorts, right? But we might see some further downside in September, October. That's kind of the seasonality of it, right? So if we understand that these flows that are pushing the S&P 500 up are technical and temporary in nature, we can wait for them to subside and time our trade on the market going down at the right time, right? Because we understand that markets move orders and that the market is not informationally efficient, right? So the reason it's so frustrating is because we need more people to understand this, and we need more people to be trading based on those factors. And the people that we could do it, because the institutions can't really do it anymore. They can't really proprietary trade. So it has to be us. And instead of trading based on that information, we're relying on charts right? It's sad. We need to fix it. And that's what I'm here to do. So Bed Bath & Beyond took a pretty good spike there. I am going to put it here in the title here. Yeah, I'm just going to say NVIDIA misses. Because at this point, because the treasuries are not behaving the way that I would like to see, and like even though we saw some upside action, it wasn't really very good. Like, look at this. If I had taken a trade, could have maybe made 10 bucks, 15 bucks maybe. It's not really good trading for the treasuries. So I'm going to focus my attention a little bit more here on Bed Bath & Beyond and NVIDIA. Unfortunately, we can't see the order flow over on these things, so we're going to have, it's going to be difficult, but we can still watch and see what happens, right? Let's see if I can add NVIDIA on here. NVIDIA New Bane. There we go. And we don't need that to take up the whole screen. Let's just do it to there. Yeah, we'll just cover up the 2 and the 5. I don't know. I feel like sometimes I'm just preaching to the choir because I think that most of you guys here, oh man, we were having this conversation with my kids last night because one of my children broke our trust. Let's just say, I won't go into it too deep, but they made a mistake, so we had to have a conversation about trust and being trustworthy and so forth. I'm having a hard. I'm searching for words this morning for some reason. Integrity is the word that I'm looking for. We had a conversation about integrity, and as I was kind of talking about it, I was realizing that like one of the overarching themes that I've seen in my life is that I believe that I have a high degree of integrity, and more importantly that people see that, right? Like I've been trusted with valuable information, and they have permissions and so forth to do things that could really be abused, and they know that I would never do that, right? Need that integrity. So I feel like those of you that are here watching the stream, and it's like a consistent group of people, you understand that, and you trust what I say, and that I'm not just going to say something based on my own opinion or to try and make money off of it from selling something to people. I'm going to tell you things that I have reasonable information proves that is true, right? And, how do we expand that? How do we get more people to understand what we know? I think you can see the order flow for their stocks via NinjaTrader 8 using Bar Trader 15-day trial. Oh, I have to look into that. I know that there are ways to get order flow from stocks, but it's just kind of, I don't know, in a situation like this, I kind of feel like you had a big event. Now you just kind of see how it plays out, right? Because it could be that NVIDIA news, that was the event, and now it's just going to rebalance the rest of the day. Barnhart, I've never heard of that before. There's definitely ways to see it with because I've seen people using what's well, I can't remember the name of anything today. Anyways, typos. What is the Vista chart? Was the original Vista chart called? Bookmap, that's what it's called. Yeah, I've seen people using Bookmap on stocks, so it can be done, but I don't know how you get it. I think that they were getting it through Thinkorswim or Interactive Brokers or someone like that, right? Well, it looks like the S&P 500 is continuing upwards, although the treasuries are not returned back down to the low end of the range. Heat map, yeah, that's well, a heat map could mean a bunch of different things, right? One of the things that I think they still do it, that Thinkorswim had built into it, is these heat maps where you could take any indicator and turn it into a heat map. So what it would do is if you had something like RSI, right? You would say 100 is blue and 0 is yellow. And then you would have an XY axis, right? Which would be different periods. So you could watch like 100 different periods along this one heat map thing. That was like a really cool feature. You got a link to this stuff. Mm-hmm. 10-minute delayed futures and Forex, 15-minute delayed equities and indexes, all trader futures. Wait, you pay $80 a month and all you get is delayed data? What? Okay, real time. Okay. It says it's for professionals who need real-time data or additional licensing options, but I really wonder how many professional traders are using that. You know what's something I'm seeing a lot that also really bothers me? So on TikTok, it's always, here's what professionals do. This is, yeah, I'm going to show you this professional strategy. And it's like, so there are some guys on TikTok now that are like, that do understand what they're talking about. So there's this one guy that shows quant stuff, and he's showing how to do a quantitative strategy based on a basis in cryptocurrencies, which is like pretty cool, I think. But there's other people that are like, oh, here's a volume profile or a footprint chart. This is what real professionals use. No, it's not, guys. The way that professionals trade is fundamentally different from how a retail trader can trade, right? They are not allowed to do what we do. And in many respects, they avoid doing what we do. But we can't really do the things that they do either. But what we can do is we can understand why they trade the way that they do and try and take advantage of that sometimes, right? But you can't duplicate what the professional traders do and make the money from doing that. And when I say professional, I mean like somebody working for JP Morgan or Goldman Sachs, right? If you were looking for a professional, I would want to look for a professional speculator, right? So like there's this guy I'm following on LinkedIn that works for Cargill, which is like the largest commodities trading house. They're speculators, so they do what we do. But guess what? He says technical analysis doesn't work. Right? And the Treasury's still hanging out there up in the highs and kind of maybe threatening to breach the highs now. There is a little bit of liquidity at 142.10 in the 30-year and 27 that might be kind of like they might shy away from a little bit. So let's just kind of wait and see how that flows through. You see, as soon as I think there was a couple of people come in because I put Bed Bath & Beyond in my title, and then I said technical analysis doesn't work. They disappeared. They don't want to hear it. But no, unfortunately, what we do is so different that you can't just copy professional traders' way of trading and make money from it. And it sucks. Like the reality is, if you are a retail trader and you have like 5 years of consistent profits under your belts, the professional traders over at JP Morgan and Goldman Sachs would probably love talking to you. Like, that's the reality of it, is that there would kind of be like, how do you do that? Because you'd be doing things that are completely different from what they're doing. Did that guy share more with you about how they trade? How do they do order flow predicting like the papers discussed? Which guy are we talking about? I haven't gotten any. I talked about a bunch of different people there, so the guys, the people that originally taught me, that kind of set me on. I mean, it was only a little bit. Oh, the guys at Cargill. Well, he I haven't heard him say anything about order flow yet. He talks a lot more about like the psychological and career development aspects of things. And he did say technical analysis doesn't work. But when he's talking about things, he's talking about like you read all of the reports and the information about the market, and you come up with a prediction about what that commodity is going to do in a trade, and you work together with the other traders to set a trade up. Is what they're doing. So they are speculating. They're saying, like oil is maybe a good opportunity right now. Oil has come back pretty significantly, hasn't it? But the analysts over at Goldman Sachs think that there is still a structural supply deficit in the oil market, and that prices will continue to see some pressure to the upside. So Goldman Sachs is saying, well, I don't know how much lower it can go from here. There's something weird going on with oil, like where they're saying that the demand is not there or that demand is collapsing. But, now might be a good time to go long oil because of those fundamental reasons. And that would be the sort of trade that these guys at Cargill would be doing, right? Catching that mispricing in the market and bringing it back in line with what the fundamentals really say. That's were the sort of things that he was talking about. The 30-year broke new highs. So a little bit of flattening on this move. Dollar, it looks continued pressure to the downside, although it's only below 106, so that's not a huge move. It's a little bit of a spike in corn. Actually, you know what? Everything on my watch list is up today. So treasuries are up. The biggest winner, though, is silver. I mean, silver got hammered on Friday and completely reversing today. But the micros, RTY, is outperforming this morning. So. And NQ, even though it is up, is underperforming everything. Oh, actually, no. ES is down more than NQ now at this point. And YM is lagging even that. So maybe the NVDA hit wasn't as wide reaching as I thought, maybe. I mean, look, NVIDIA did recover pretty, at 50%. It's okay. It's okay. Bed Bath & Beyond had a really big buying spike on the open, and then it came all the way back. Oh man, how many times have we seen that where it's like something's moving overnight, and so everybody comes out to watch it and buys it on the open, and then it just comes right back. I think the only time I can think of where I didn't see that in a stock was the GameStop fiasco, right? On the GameStop fiasco, that was it. Did that spike, and then it just kept going and going and going. There's the treasuries coming back up. Man, is the 10-year going to touch 120 again? 120 evens? Probably anybody that's coming in to look at Bed Bath & Beyond, they're like, oh, why is it such a teeny little chart? And there's a level break set up right there at 27.5. I don't think that this one's worth taking, though. Actually, well, we are getting a decent amount of trend. So you're working to make this full-time or more as a second income trading? I don't think that I will ever... I would ever want trading to be my sole source of income. Yeah, I would... So one of the things is, like, most retail traders, they're thinking, yeah, I'm going to get good at this, and then someday, you know, I won't have to do my day job and I can just live off of trading. That sounds like a nightmare to me, man. like as good as you get, you're going to have losing years, right? So do you want to have to live in a way that, you know, a 20% decline in your net worth or a 50% decline in your trading account, you know, that you can handle that hit, right? Because you still have to live on it. So it's not... So on one hand, I kind of think that just living off of it is maybe not very realistic. But on the other hand, I also think that would be, like, really stressful and not very fun. So I think that, yeah, you could get to a point where, you know, you could live, you wouldn't have to work a day job, but I don't think that the income would come just from day trading, right? I think that you would want to have money in multiple ventures providing you consistent income, right? What do we call it? Passive income. I think that you would want to have multiple passive income streams, right? For me, I want to continue building the YouTube channel. So trading is its own thing, and it's gone well this month, at least. It's gone well this month. It has its ups and downs, but I have a day job that is really good. And the YouTube channel is doing really well. And I just put everything that I get from the YouTube channel and I put it back into the channel, trying to make better content for you guys. And I really would like to be able to be successful enough at the YouTube channel that I could spend my full time on that, because I think that would be the thing that would be providing the most value to the world. Think of it this way, okay? Like, what is your purpose in life? I want to get into this more because I feel like that one of the biggest problems that we have in society is that people don't necessarily have that direction anymore. It used to be that God and family would provide that base for you to know what your goals and purpose should be, right? And now that religion is not as prominent, people still have to fill that hole. And sometimes the things that they fill that hole with ends up being philosophies that are not very positive or helpful to society, right? So I think that the purpose, if you want to go for the greatest purpose that you can in this life, it is to build society and make it better for the people that come after us. And that is why we have the society that we have today, is because men for millions of years have been doing this and teaching it to their children and continue to build the society up, right? So if that's my purpose, what is the thing that I can do that will lead to the greatest amount of future prosperity for people in the future? And well, the greatest thing, if I want to have a long-term impact, is have kids and teach these things to my kids, right? But then the other thing is to teach as many people these things as I can. Of course, you know, I have my own edge, right? A lot of this is like, I can teach people this stuff and, you know, it's tough. So not very many people will do it because it's tough, right? But the more that we can get to understand the true nature of markets and to start studying the markets and the things that were trading themselves to understand what drives them, the better society is, right? So making the YouTube channel more popular and more successful is a imperative for me. That's the thing that could give me the largest potential impact in the future, right? Yeah, I sell some tools. I call it tools. I don't think that the things that I sell are necessarily indicators. Like, there's a signal and you take this trade in and it tends to have this sort of, setup. It's not like that. But my package includes like a way to look at spreads, because you don't get that in NinjaTrader. Way to look at the dollar index. Like, these are important things, man. How do people trade without knowing what the dollar is doing? Everything that you trade is priced in dollars. You would think that it would be a good idea to understand what the currency that you're actually trading in is doing, right? But no, nobody cares. So that's the sort of stuff that's in my indicator package, and that's why that's valuable to you. It's not going to be things that predict future orders necessarily. It's not, because that is, you have to understand the market to understand those things, right? But it does give you pieces of information about the current state of markets that you can't get otherwise, that are really quite critical and that most retail traders are missing, right? If you're going to trade treasuries, you got to be watching spreads, guys. You got to be watching spreads if you're going to be trading treasuries. Anything that you're trading, but especially commodities, you've got to be watching the dollar. You just have to. It's just, you're not going to be very successful if you don't know what the dollar is doing. So that's why we have the indicator package. And that one, I set the price on it relatively low. Should I say relatively low? It's dirt cheap, frankly. $100 is dirt cheap in indicator world, right? Because I want everybody to have it. I want to be able to use that money to be able to justify more development and to continue building the YouTube channel, right? But I want everybody to be able to have it. So I thought $100 is reasonable. Need to do better with that. I need to do some promotion on that this week. I have some materials that I need to adapt here and make some posts. I'll probably post them on YouTube and see how we go, because it was somebody helped me get them, and we want to sell a couple more indicators this month for his sake, because then if it works out, then we can continue paying him, right? But I also probably need to do a webinar with NinjaTrader here coming soon. Have some changes. Hopefully I'll get my changes for the spreads done this week. I'm updating the spread, and I already really like the changes. I'd really like to get those out to you guys. So if you have a license, keep an eye on your email, because here in a week or two, you should be getting a message that there's a new update. But anyways, too long didn't read. No, I don't want trading to be my sole source of income. That would suck. But I do want to get as good at trading as possible. So it's just an acknowledgement that trading income is not very reliable, even if you're really good. Even if you're really good, you're going to have a losing year. You really are. Oh man, there was this thread on NinjaTrader, or not on NinjaTrader, on Reddit about this. There's a thread about this on Reddit, and this guy came in and he said, this is the sad truth, is that you're going to have losing months and you're going to have losing years. And he was citing like a really successful trader that's not widely known, but has been extremely successful. And he said that, right? And there was so many people in the comments who were like, that's not true. You can make money every month. I know this person that's been... Okay. Just because he hasn't had that losing year yet doesn't mean it's never going to happen, guys. You saw that thread, Sharp? Oh, man. All I could do was comment in this thread, denial. I mean, it kind of fluctuates, but Reddit goes from like bad to like really, really bad. And right now it's like really, really bad. It's kind of funny. You would probably learn more from following the Wall Street Bet subreddit than you would from following the day trading subreddit, because the day trading subreddit is all about reading charts. That's all that they talk about there. Whereas the Wall Street Bet subreddit, they talk about fundamentals and they lay out cases and they do due diligence and they actually try to understand the stocks that they're trading, right? I wish that there was more retail, analysis like that for the things that we trade, for interest rates and commodities and stuff. Wall Street Bets due diligence threads are great. The penny stock sub does a similar thing. Yeah. I mean, the issue with the kind of due diligence that you read out there is that they're focused only on fundamentals rather than on predictors of order flow per se. But it's better than than just focusing on technical analysis, right? You're getting at least part of the picture, right? So I was saying, it looks like there's a level break setup there. I don't know if you take it here, the momentum seems kind of like, and then it ticked down and I didn't really like how it was going in, so I just kind of forgot about it. We still haven't breached those levels, so I have to feel like if I wanted to take like a reversal trade, that now wouldn't be a bad spot to try it, but the way that the action has been going today doesn't look to me like a very good trading opportunity for the sorts of edges that we're looking for, does it? It's been an interesting day in the S&P 500 though, hasn't it? Let's change this chart over here to be 5-minute charts so that we can see a little bit more clearly. Want to see when Bed Bath & Beyond is kind of dropping below the overnight gap. Because in a situation like this, I think I really want to be keeping tabs on short covering stocks, right? How many do I have now for the indicators? That's a good question. I think I have a little over a dozen active users. I guess I don't really think too much about how many people are like actively using it, because we moved from we used to have a month-by-month subscription model, and it turned out that you guys just prefer to pay once at the beginning, so we moved over to that. Of course, you can make a living from trading. Just make a trading course by copying and paste info from Google and start a YouTube channel posting big profits from a demo account while pretending it's a real account. It is, people do that, man. I was having a conversation with Michael. I think we're going to finally get to making the desk, which I'm excited. And I guess I'll try and record some of that. I don't know if it'll make a good video or not, but I think it'll be nice. I think that having a new desk will be really nice. But he was asking, because he does woodworking and stuff, and he says, oh, when I'll start watching a channel and it'll be really good, and then they start to get popular to the point where like everything that they're doing is like sponsored content, and then the channel like goes down the drain. I was like, well, there's definitely a lot of opportunities to work with vendors and make sponsored videos with day trading. There really is. I want you guys to know that I probably, for every time that I do a sponsored video, I probably turn down 20 other people. Not even kidding. Most of the people that are asking me to do sponsored content are cryptocurrency schemes, and I've just been telling them to take a hike, right? I'm only going to do something on a product that I think is going to be of interest or of value to you. So, if it's a new futures trading platform, but I think it's an absolutely terrible platform and not worth your time, I'd probably still make the video about that, but I'm not going to lie to you and tell you that it's a great platform, right? I'm going to give you a realistic idea about what is good and bad about that platform. Specifically, I want you to know, like, what is the best use case, right? Like that Iron Beam platform, man, you want to be able to have a mobile platform. I think it's a great setup. Ru was really impressed with it. It's not for everybody. It's not for me, because, I like my DOM and everything. But it was pretty good, right? That's the use case. You hate it, Val? The Iron Beam one? Yeah. I was just really impressed with how well they pulled off a DOM on your phone. Yeah. That's okay. I really was kind of like, this is really good, but I don't think that most of my users will use it because most of my users are going to do Sierra charts or Jigsaw. I mean, that's just the way, we're order flow traders, and we trade off of the DOM. We're treasury traders. But if that was your if your use case was, I want to swing trade, and I still want to be able to see the order flow when I'm on the go, it's the best solution. It's the best solution, and they did a pretty darn good job with it. The phone platform is nice, way better than what's on Tradervate, which is total hot dog water on. I haven't looked at Tradervate in a long time. I remember when it first came out because John Grady was, spoke really positively of the platform. But I look back on that and I'm like, I don't really get what the driver was to move over to them from NinjaTrader, to be honest with you. I don't think that they're kind of set up where you pay $100 and don't pay a commission, except for the exchange commission was really that great. Worst level break of all time. 120 evens on deck. Not while that 10-year still hasn't breached higher, the 30-year has. I do kind of suspect that we'll trade 120 even today, though, don't you think? I mean, it's well within the range of volatility that we've had. But this does not really look like it's trading off of strong order flow, does it? Like, it's made some attempts, so I wouldn't say that it's dead in the water, but in the end, doesn't look like it's yielding much for us, is it? Of course, I'm going to say that, and there will be a huge retracement of Friday's move after I'm gone, and then I'll eat my words tomorrow, yeah? Anyways. Point is, there are temptations. There are temptations where with a channel like this, you could just start taking every little offer that came along, but that wouldn't be good for you guys, right? See, for me, it's easy to not do those things when I know what the purpose here is, right? My purpose is to make the world better for the people that come after me. And how does the stream play into that? Because the stream allows us to better understand markets, or not just me. I mean, it helps me learn that, but it also helps me teach other people the true nature of markets, and it helps make markets more efficient. That's what we're doing. So if somebody comes along with some product that doesn't really help in that regard, then I'm not interested, especially if it's some cryptocurrency, Ponzi scheme that is basically encouraging people to invest on hype. Then I'm not helping make the markets more efficient by making a video about that, am I? Right? The furthest I'm willing to go was the TE Smart KVM switch. But that's hardware, right? And I think that it's hardware that a lot of you guys could benefit from because you have multiple monitors, right? And you might have a work laptop like I do. It was this device has been great for me. It's not perfect, but like if they come out with newer ones, probably will get them. What if you did one as a joke and memed it for the entire sponsored segment, and like what creators do for Raid Shadow Legends? I've never gotten anybody that wants to do that kind of a sponsored content. Like these sorts of ones where like they're advertising VPNs and stuff like that, and it's just like a short blurb at the beginning or end. I haven't gotten requests like that. I guess that might be because anytime that somebody serious comes along, I say, well, I'll make a whole video for you. But it's kind of an interesting market because the CPMs for the overall YouTube space. Okay, there's a break. That was a break. Sorry, I didn't see it immediately as it happened, but the 10-year did break the high, and it looks like there was a little bit of a stop run here. Now there's some iceberging at 29.5 that might be profit taking. I just think we could still see 120, but it does not look like it's going to be easy. Anyways, the CPMs have come down, so you can get sponsored content or advertisements for about 20% less now. So I think that now is probably a good time for certain vendors to invest in that sort of thing. Like if you're a vendor for something, you don't feel like you've had a very strong social media presence, now is a great time to try and build it. And that means not only making content yourself, but also sponsoring content, I think, yeah. Though I have to say, one thing I've noticed is if you're doing sponsored content, you do so much better if you have your own content out there too, right? So like say you're a trading platform, okay? You would go and you would have your own videos, and you would have videos not just about here's how to use my platform, but maybe just some videos just on like trading in general to kind of attract the general trading audience, right? And then you go and you sponsor video content on other people's channels, right? So then they're going to search for it, and the recommended video that they're going to get off of that is going to be your official videos, right? And that helps a ton with the conversion, I've found. So you'd want to be building up your own channel too. And now is a really good time to do it, I think. Now, for what I was doing, because I've kind of been going more the direction of, I want to do more current event stuff, right? Well, I'm not quite there. I still keep finding videos of things that you guys that would be really beneficial to you that we talk about on stream and that I don't have a video for, right? But I want to go there. But the summer, at least, I don't know if it's just the summer, but hasn't been very good for that kind of news lately, has it? Things when the market took a downturn, all of a sudden there wasn't as many funny stories to talk about. It was about the time that the whole Elon Musk Twitter thing started popping off, right? And after that, there wasn't just not as many funny things to talk about. So I saw a little bit of clicking and that sort of a thing. I do kind of have to wonder, earlier on in the day, we saw that spoofing that was pushing the markets down. We didn't see like an initial move off of that. And I still hold to what I was saying that was like, why would you spoof there? There's no need to. You don't need to do that. But maybe we did see a large meta order buy in the end that they knew was coming, perhaps. I think that the reason why that thing first broke up was because of the NVIDIA thing. I mean, that's when it happened. But clearly there was more flow behind it than just that, because we did have a pretty decent move up to the highs. 2 basis points. 2 basis point move. It's not awful. So in the end, I think that that's a spoof worth the CFTC worth investigating. Yeah, I think that spoof was worth investigating. I tweeted it to them. I tagged the CFTC in it. Probably nobody cares. See, nobody liked the tweet or anything like that, but I did tweet it to them. Probably I need to spend more time on Twitter. That's the problem. You have to tweet constantly. You have to tweet constantly. This song has a little tap in it, and I don't like it. It makes it sound like that there's actually something tapping out here in the room. Let's see here. I haven't really been paying very good attention to Twitter here this morning. Let's see if there's anything that we missed. Nassim Nicholas Taleb question: don't you lose followers when you post math stuff? Answer: yes, that's the idea. That's my boy. I don't agree with Taleb on everything, but I really like that guy. I really like that guy. I really hope that someday I get to meet him. What do you guys think about that? Because now that the pandemic is over, you know, there's going to be trading conferences and stuff. I'm not too interested in doing it this year, but maybe next year. But I'm kind of like, yeah, but you go and like nothing will happen because it'll just be a bunch of people blabbering about technical analysis again, right? I don't know if any of you guys would go, but what do you think? You think you'd be interested in going to like a day trader convention? Because that would be the kind of place where you'd maybe have the opportunity to meet a guy like that. Actually, take that back. I don't think that Taleb would go to a day traders convention, would he? But some other sort of conference. I would like to get going to like some of these machine learning and quant finance conferences. But I'm just not quite to the level where I'd be able to get anything out of them. I think I'm still very much a beginner with machine learning. I almost joined a uranium conference, but I don't really know uranium like those people do. I just have stock. It was all fundamental stuff. Oh, that's cool. So have you guys noticed, what was it called? What's the guys that are making the small nuclear reactors? I did not know that in the last 6 months or something that they've IPO'd, and they had, you know, they released that their reactor was approved and the stock was up 20%. So they were, actually, I think it was up at 50% at one point, but you know, their stock price started at $10, and I think at one point it was $15. And I was like, oh, I missed that because I wanted to invest in next generation nuclear stuff. I don't know if I should put all of my eggs in one basket though. It's new scale. That's what they're called. I think what they're doing is a little risky. I mean, a little risky, like there's a chance that it's not economical enough still. So the issue that we have right now with power is that solar is actually cheaper. Solar is cheaper. Man, it's this is one of those things that's a little depressing to think about, because I'm not saying that renewable energy is bad, but there are some severe downsides to it. Like one of the problems that they're having with solar panels that I've read about is birds will think that it's a lake and they will dive bomb into the nuclear, or sorry, not the nuclear, into the solar array, essentially, right? So these massive solar arrays are killing birds, essentially, and like massive numbers of birds, apparently. Plus, it takes up a lot of land. It takes up a lot of land. So, like, there's some problems with solar. I really think that nuclear is a better solution, but solar is actually cheaper now, considerably cheaper, and it might be difficult to get nuclear power to the same level that solar is for it to be cheaper, which is to say that if we had initially invested in nuclear power to begin with, then the nuclear power would probably be cheaper and better and so forth. But because nuclear got there first, that may end up being the way things go. And then there might be some point at the future where it becomes, where the problems with solar become big enough that you end up having to move to nuclear anyways. You know what I mean? The wind farms too. Yeah, well, my understanding about wind farms is that wind farms actually requires a lot of carbon to actually make the windmills and stuff. And so they really aren't saving us too much carbon emissions. But I mean, the thing is that a lot of the carbon emissions are coming from like undeveloped areas. It's really not the United States that's the problem at this point. But China is working on that problem. Like China is taking it seriously, in my opinion. I think they will get there eventually. After they've totally, you know, taken advantage of us doing it before them, right? And then they'll switch over. They'll be the preeminent world economic power, and then they'll switch over green. That was a good break, but they came back to the scene of the crime quite easily. So I'm still seeing this kind of thing where it's like I think that there is a slight bias to the upside, like some large institutions or whatever needing to buy, but it's not super strong. And so a breakout doesn't continue, it just comes back really quickly because it's like the trader's just getting excited, right? And it's natural. Like me, man, speculator Seth of 4 years ago would totally have tried to take that trade and would still be sitting in it and being frustrated that it's come back on him. That's definitely what I would have done. So I would have seen the level break, I would have taken it, sat in it forever, saw it pop off, think that I got a good trade and that it's going to continue, and then be frustrated that it's come back so quickly. Right. But Seth of today kind of understands the conditions and what kind of predictors of order flow I actually have, enough to know that it might be a little flaky here. Might not have the best trading. So just gonna, hey, I made $3, right? Was that enough? $3 enough? Oh, did we not put the dog away? Sometimes if I'm not the one that puts the dog away, they don't do it. They forget to do it. $27. And what did the spreads do through all of that? Well, knob spread hasn't really changed direction. Knob is still steepening. Man, we don't have Salim today. I'm just realizing now, by now we would have had him, but he must be working too hard. That's okay, Salim, work hard. Now is the time to work hard. You'll have your whole life to trade. What's Bitfinex going on about this morning? When Tether declares bankruptcy, not if. Tether will be the first to point to these terms of service in bankruptcy court that they don't have to pay Tether bag holders squat. Basically the same thing Celsius does right now with their own terms of service. Everyone highlighted the Celsius terms of service to this vulnerability when things were good. It was called FUD, despite it being Celsius's own terms of service on their own effing website. Yeah, that's always been the case, though. I don't know why he's talking about it this morning. Trading Floor Audio tweets, Buffett's Berkshire pounces on market slump to buy equities. Via Bloomberg, Warren Buffett's Berkshire Hathaway is following an old adage, buy the dip. Yeah, you know what? So here was something that I did. I feel stupid saying this like this because I've lost money on it so far, but I do think in the end it's going to work out. Is like I was like, oh, okay, I think I want to buy this company. And then, so like one of them was AT&T. Remember me and Uzi kept talking about AT&T looks like a good stock. It hasn't done very well. Okay, I'm glad that I didn't buy AT&T. But then like Warren Buffett comes in and buys it. It was like every company that I was looking at that I'm like, this seems like maybe this is a good opportunity. And Warren would beat me to it. So I'm just like, screw it. I'm just going to buy Berkshire Hathaway. So I own a substantial portion of Berkshire now. Hopefully that one works out. I mean, Berkshire in the long run, that's a good trade. But what I want to see is 10 years from now, people say, okay, look, here's what would have happened if you had invested with Kathy Wood, and here's what would have happened if you had invested with Warren Buffett. And Warren Buffett will be like this, you know, legendary market return. Yeah, I think that, well, because I bought it like in May, I think. You know, the market took quite a bit of a tumble since then, so I do have a small loss on the Berkshire still. I haven't looked at it in a while. We'll go look. I don't think I'll show you the whole screen just because I don't know, there might be stuff on there that would not be good to share in terms of like account numbers and stuff like that. But if I look, well, we're doing good today. Up 1.5% on the account. Still a long way from the account's high at 6,900. Ooh, yeah. Oh, now that's interesting. The one that's making me the most today. Okay, but Berkshire Hathaway, I am down 7% on. Total gain loss on Berkshire is down 7%. So, yeah. But I you know, I'm in that one for the long haul. I'm in all of these for the long haul. There's one, you know what the one is the most frustrating to me? Oh, no way, I have it down here. Actually. Rare earth element resources. So I'm in this one because I believe that we need to improve our oh, well, let me close this one down here. There we go. I think that rare earth elements are going to become more and more necessary, and this is like one of the only mines in the United States. Well, it's coming back here as the market comes back, but when the rest of the market got hit, they got hit hard. So like, if I had sold it up here when it was like close to $3, would have been so much better for me. But that's just because I got a really, really low price when I initially got in. Like, even as much as it has come back, it never came to my entry price. But what's been going on? Oh my gosh, this happens. So who is it? There's another stock where this is happening. That's right, it's Coinbase. So in Coinbase, everybody's saying, oh my gosh, Coinbase looks like such a great buy because it is trading literally below book value. It's true. It's trading below book value. But you know why that is? What's happening is they're offering more stock. They're diluting shareholder value to raise more money, and that's where all of that book value is coming from, right? So that's why, part of why REMF came down was that the executives said, well, this is going really well, but they're still working on the permits and stuff like that. So this is still like a very speculative game. So they said, well, we need to offer more shares and raise money, right? So that we can continue our, they're doing the right thing, but dilutes shareholder value and brings it back, and it sucks. But they also gave us, some options to buy, so my position in it is larger now in the end. But I hope this one, I do kind of wish I had taken some profits and I could be getting back in right now, right? Look at that. But I don't know enough about, I'm not an insider. You gotta be an insider, man. That's the game. That's the real game, isn't it? Well, let's come back to Bed Bath and Beyond. I haven't been to that store in a while. Maybe I should go there. Oh man, when you look at it on a daily chart, it just Need to chat in Discord more often. What the heck? Some of the spam that they try to post on our Discord server is like, what the? I want to come back over here and look on my charts on the left. I'm kind of a little zoomed out here. Yeah. This trend to the upside in the S&P 500, and it's not too bad, is it? It's not too bad. Now the one that really kills me, the other position that I have, that really kills me, Sumo Logic, man. That one, at one point I had so many profits built into that, and I wanted to be in it for the long haul, but there's no way I imagined that it would come back this much. No way. And there was a point where they missed earnings one time. It was like all of the analysts like, okay, well, we don't want to cover it anymore then. I was like, no. Should have just bailed right then and there. That's what everybody else did. I mean, it's okay. Like the portfolio is still outperforming the S&P 500, but could have been a good grand or two higher if I had made some better trades. Better exits. News Squawk tweets if anyone wants any insight into how slow the news cycle has been today, and they tweet the Evening Standard. Bruce Grobelbar Belar has hit out at confusion caused by the UK's COVID travel rules after he was fined £1,000 for falling foul of the pandemic restrictions. Okay. Is that just some regular guy? Who's that? Man, they came back. They're not back to 22, but 25 is still kind of like, whoa, okay. There might still be a liquidity hole at 27.5, but sometimes you got to worry about like these sorts of things can become like a catapult. Like it comes up and then it swings it back down, and because the liquidity is so bad, it gets swung back down here. But you know, I don't think that I see really strong signs of people like going outright short, so I could see it coming to here and coming back a little bit. I can also a lot of the time after I'm gone, it moves, and I'm really suspicious that's that. So what we'll see today is that there will be a significant move in the treasuries after I'm done trading. That they'll just start selling off, and I'll be like, oh man, that was my chance. Yep. User reports indicate Yahoo is having problems since 10:41 a.m. East. Who uses Yahoo? Come on. To be honest with you, I don't understand why YouTube is still a website. Like what they're doing. It doesn't. Who visits that? Are any of you guys regular Yahoo viewers, browsers, whatever we want to call it? Jean-Philippe Bouchot, I feel extremely fortunate to have friends, collaborators, and wife, all three together in the last case, having cobbled together a scientific conference for my 60th birthday with speakers whom I have done physics/finance with in the last 38 years. What? And then there's a link. What's this link? A rare event. 9th of September in Paris. Let's go. Could totally go. Please register before the 15th of August. Hey Melissa, you want to go to France? I'd love to go to that. Wait, who are the speakers though? Elaine, Aspect, Sebastian, Belbar, Ludwig, Berthier, Eduardo Brazen, Michael Ben-Saquin, Giulio Biaroli, Felipe Claudian, Alan Cometo. I don't reckon. Oh, Doyne Farmer will be there. Cool. It's the only name on there that I recognize, though. I'll keep an eye on that. Here's my cargo guy here. You want me to read what he's posted today? One of the most important things in commodity trading is dealing with market structure, an inverse or carry market. Contrary to stock prices, there is no one price for commodities. There are different physical delivery periods and corresponding prices related to supply and demand cycles. Storing commodities costs money. Warehousing, handling, insurance, interest. This is reflected in the price of commodity futures further out in time, and hence in the future, hence the name. Oh, I see. So the reason that there tends to be a basis cost is because you have to store it. Gotcha. The stock price of a company going up or down is simple to follow. In the commodities, you need to look at how the front delivery periods move in relation to the deferred delivery period. An inverted curve normally reflects strong demand for the commodity on nearby, making buyers prepared to pay a higher price for prompt delivery. A curve in the carry reflects weak nearby demand, so sellers are prepared to discount nearby delivery to facilitate buyers to store the commodity for future usage, taking into account the above-mentioned storage carry costs. The mechanics and risks related to market structure are complex. 1. A well-functioning futures market reflects the physical underlying, and an inverted futures market reflects strong nearby demand. But inverted future markets can be caused by technicalities rather than true underlying supply and demand dynamics, like large positions of speculators, financing, logistics, and complex physical delivery processes. Okay. Inverted markets, rightly or wrongly, attract speculative funds, often algos, as a reflection of strong demand, amplifying inverses, causing more speculation. Inverted curve, okay. Option gamma squeezes or other liquidity voids lead to liquidity drying up further so that a market curve becomes technical, causing stress not related to the physical underlying. The process of cash convergence, cash commodity prices adjusting to futures to show the extent that physical delivery against futures makes economic sense, is slow, complex, and often painful. Remember a negative spot crude oil price during the peak COVID. In an extreme case, the futures exchange steps into forced liquidity being provided in order to retain an orderly market. Many can't afford to wait for this. Remember the recent LME copper spectacle? Yes. Inverses can stay in a market for long to implode in seconds when the music stops. Trading P&Ls can be represented incorrectly when inverses have been marked to market but not cashed. Gotcha. Hedgers, buyer and sellers of physical commodities who make opposite trades in futures, but to manage price risk, a critical decision is to where to hedge on the curve, facing less liquidity and less knowledge about the deferred, but more risk and critically less time to act on the nearby. A wrong assessment of supply and demand cycles can be dangerous, as a futures contract at an expiry is a true physical contract, a firm commitment to deliver or take delivery. Market structure has made and broken trading careers and even blown up companies in a spectacular fashion. I could write a book about it. So then do it. I would love to have a book from you, dude. Oh, this guy. So smart. I mean, I kind of knew all of those things, but just to hear him talk about it is like, wow, he really has very intimate knowledge on trading the commodities markets. I would really like to see it. I would totally buy a book from him. Math for scientists. That looks like a good one as well. I really liked LinkedIn. That's what I'm doing as I'm reading LinkedIn right here. If you don't have a LinkedIn, you should get a LinkedIn, man. Come and find me. I think I have a link in the video description for LinkedIn. It's shocking how many AI startups are still limping along as consulting companies. AI startup founder raise money under the premise they'll solve something big. The core tech they develop will develop across their customer base in a scalable way, or so they hope in practice. However, almost none of their technology applies directly from one customer to the next. Yeah, that's exactly who is it, Snow? That's exactly what I see with like Snow and these other guys is like, there's another monitoring company that was really popular. And I think that those companies are all hype. So Sumo Logic is the one that I like because I use it and I'm just like, okay, yeah, but this tool is actually useful. Or this tool actually works well now. And yeah, they will be able to pull metrics out of it in the future. But that's a long and difficult road, but they're way more technical about it. So you can actually get that sort of stuff out of their framework. And I don't think that these other ones will. The IT systems, workflows, measurements of success, etc. vary so much that even if they're working on a specific problem category, preventing money laundering in banking, they don't build valuable tech, only valuable experience. They have some hands-on experience with a complex problem, and they're basically applying that contextual experience in a new bespoke client. They've paid for an experience with a problem, spending manual hands-on time building a bespoke solution, hopefully helping markup. This is a good post. Very hard once you've devolved into consulting mode. It's very hard to climb out, but maybe that's not companies want to buy turnkey AI solutions, which is impossible, but it doesn't mean that they won't try, and venture capitalists will be there to finance any attempts to do this. Well, it's about time to get going for me, guys. I don't think that the market's going to do anything too interesting in the next 5 minutes, do you? I download Excel spreadsheets from them every once in a while. What, LinkedIn? I'm always finding one of the things I find on LinkedIn a lot that I think is interesting, especially if you're like really new in a particular field, is like free PDF. You know, be like a small little PDF with useful information. Oh, you know what? I totally forgot. Like we have our indicator on there with the data pipe. Can come and look at two things. I need to look at two things here, and then it'll be time to go. First thing is we want to look at how much data it's put out today. Okay, it's actually less today, but that I guess is in line with what I would think. But another thing I'm wondering is, because I'm using an array list, does that array list like grow in size and then stay there and end up taking up more space than it should? No. Oh, that's interesting. NinjaTrader's only taking up 700 megabytes today. Okay. Well, I don't know. I was on Friday, I came back and it was like I was taking up almost 1800 megabytes or something. And I was like, whoa, wait, what? Brave browser is taking up, man. It really disturbs me how much memory web browsers take up these days. You know what? It's like you put on a chart like that. That's a lot. You put on a TweetDeck is a little expensive, but that's good. That's good. I was a little worried about that one. So I think I can relax with that. We're collecting the data, so now I have enough that I can definitely start like making Python scripts to parse it, I think. But I'm reading a book a little bit that kind of give me a little bit better of an idea about how to do those kind of pipeline processes, because like I know what to do, but maybe there's better ways to do it. Yeah. So yeah. I'm gonna finish reading this thing, and then if I have questions, I might ask them. I might ask some people how to do it. To do it fast, right? So it's going to be like calculating cumulative delta, for instance, right? Or the order book, like how can you do that as fast as possible? Might not be, Python might not be the best way to do it. Okay, guys, I think it is time for me to get going. Good day. I mean, I feel like it was a good session, even though we didn't really make any money, but I had fun, had some good discussion. But I will see you guys tomorrow. I mean, Wednesday's the big day, right? But I'll see you tomorrow. Meantime, stay profitable, friends, or at least don't lose it all.